Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday. It's March 9th. We got one of the economic data that we've been wanting to hear, and that is the weekly jobless claim. So that's really all we got today. Tomorrow we'll get a little bit more from the unemployment rate to how many jobs have been created, reported by the Bureau of Labor Statistics, to wage costs and stuff like that. So we'll get that stuff tomorrow. That would be the big day tomorrow. But today we got the preliminary numbers for weekly jobless claims. So last week we had 223,000 people apply for unemployment. We figured it would go up a little bit more, so the forecast was at 238,000, and it came in a little higher at 243,000. These are still really good numbers. Even though it went up 20,000 this week, these are still really good numbers. We're not seeing these type of numbers since the 1970s. So you're talking like 45 years since we've seen these type of numbers. So these are phenomenal. The levels we're at right now. So let's kind of take a look here at right now. The stock market's actually up. Obviously, they kind of like what we're seeing so far. They've been taking a beating in the last couple of days. Part of it is the ECB's announcement. They basically stood pat. They kept their rates unchanged to the quantitative easing. So they figured because they didn't really have to do really anything. Inflation's coming up. There's a slight intick that things are getting a little bit better over in Europe as well in those regards. So, and then we also got oil. Oil prices, they were up to almost $60 a barrel, and now they've dropped just below $49 a barrel, and that's creating a little bit on the energy sector of the strain on the energy sector of the stocks here. So oil prices are kind of bringing stocks down a little bit more than what they did, but today overall all three markets are up so far this morning. Not a lot, but up a bit. Bond market, of course, is taking a bit of a beating. We're we're approaching the 2.6. We're, I think, on the 10-year Treasury, we're up about 2.57% earlier today. Right now, we're down about 10 basis points from where we left off yesterday. We touched off this floor of support, the new one that we created since we broke below the last one, which now becomes a new ceiling, which becomes more difficult for us to break above. We're on this downturn here. Now, of course, tomorrow we got the jobs numbers, and if they come in pretty hot, expect this to fall even further. We could see worse in pricing still in terms for rates. So be very cautious here. We got I think it's about $10 billion or $20 billion worth of 30-year treasuries going to be on auction today. So that could also create a little bit of supply issues for us later on. So if it doesn't go well, it could potentially create oversupply and worsen the rates a little bit further today. But today rates did worsen compared to where we left off yesterday. As you saw, we did touch off it yesterday and pulled up, so it did some improvement. Today we touched off it. So far we're not quite there, but we'll kind of wait and see what happens. Again, tomorrow is the big day, and it could help us or hurt us. And chances are, with everything's going the direction of better jobs and stuff like that, it could more likely hurt us in terms for interest rates. Of course, stock market is doing much better, so that's obviously a good sign here too. All right, folks, that concludes it here. But if you guys want more updates throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter, and you'll get more updates throughout the day. Have a wonderful day. Thanks for watching. Bye-bye.